Hey everyone, if you're an investor, trader, or just someone interested in the world of stocks and financial markets, today's video is going to be particularly insightful. We're diving deep into Fiserv, ticker symbol FISV, a major player in the business services and financial technology sector. Over the past year, Fiserv has been a stock that's sparked a lot of conversation in analyst circles, and for good reason. From its recent price movements to updated analyst ratings and earnings reports, there's a lot happening that could affect both long-term investors and short-term traders. Whether you're already holding FISV shares, thinking about adding them to your portfolio, or simply want to understand what Wall Street analysts are saying about this stock, this video will give you a comprehensive overview. So, grab your notebook, get comfortable, and let's break it all down. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. First, let's talk about what analysts are saying about Fiserv. On Wednesday, Jefferies Financial Group made a notable update. They raised their price target for FISV from $60 to $65. While this might seem like a positive move at first glance, the stock is currently trading slightly above that, meaning the potential upside from Jefferies' perspective is minimal, around 0.17%. In other words, according to Jefferies, the stock is essentially at fair value, which is why their rating remains a hold. But Jefferies isn't the only one weighing in. Over the last few months, multiple analysts have released updated reports reflecting a broad range of opinions on Fiserv's prospects. For example, B. Riley recently reduced their price target from $105 to $76 and kept a neutral rating, indicating caution. Meanwhile, Wolf Research reaffirmed a peer perform rating, signaling that Fiserv is expected to perform in line with its industry peers. Then there's UBS Group, which also set a $75 target and issued a neutral rating, while Compass Point downgraded the stock from a strong buy to a neutral rating, setting a $127.50 price target. Finally, Stephens has placed their target at $75 as well. Looking at the bigger picture, analysts' opinions are fairly mixed. 10 analysts have a buy rating, 25 have a hold rating, and 2 have recommended selling the stock. The consensus rating, according to MarketBeat, comes out as a hold, with an average price target of $113.08. This tells us that while some analysts see potential upside, the majority think the stock is fairly valued or slightly overextended at its current price. Now, let's shift to Fiserv's recent stock performance. During the latest trading session, FISV gained 62 cents, closing at $65.11. The trading volume was around 1.35 million shares, significantly lower than its average daily volume of over 9 million shares. This suggests that while the stock did move slightly higher, market participation was lighter than usual, which could signal cautious investor sentiment. From a financial metrics standpoint, Fiserv maintains a quick ratio of 1.08 and a current ratio of 1.08, indicating the company has adequate liquidity to cover short-term liabilities. Its debt-to-equity ratio stands at 1.15, showing a moderate reliance on debt financing. In terms of moving averages, the 50-day moving average sits at $65.76, very close to its current price, while the 200-day moving average is significantly higher at $107.14, hinting that the stock has pulled back sharply from its longer-term trends. The stock has a market capitalization of approximately $35.39 billion, a PE ratio of 10.06, and a PAG ratio of 2.72. Its beta is 0.80, which suggests that FISV is less volatile than the broader market. Over the past year, Fiserv has seen its price fluctuate dramatically, hitting a 52-week low of $59.56 and a 52-week high of $238.59. Clearly, this kind of volatility reflects both investor optimism during peak periods and significant pullbacks more recently. Next up, let's examine Fiserv's latest earnings report, which can help explain the stock's current position. On October 29th, the company released its quarterly earnings, reporting $2.04 per share. Unfortunately, this missed the consensus estimate of $2.64, coming in 0.60 cents below expectations. Revenue for the quarter came in at $4.92 billion compared to analysts' expectations of $5.37 billion. This was a modest increase of 0.9% year over year, showing that growth is slowing but still positive. Net margin was 17.05%, and return on equity reached 19.47%, which are decent profitability metrics, suggesting the company remains operationally efficient despite missing revenue and earnings expectations. Looking ahead, Fiserv has issued guidance for fiscal year 2025, projecting earnings per share between $8.50 and $8.60. On average, analysts currently anticipate that the company will post $10.23 EPS for the current fiscal year. So, while the company has experienced a slowdown in quarterly growth, profitability metrics and future guidance suggest that the fundamentals are still intact. The market's reaction, including analyst downgrades and neutral ratings, reflects a balancing act between growth potential and recent performance misses. To make sense of all these ratings, let's break it down. Analysts weigh multiple factors: past performance, earnings growth, revenue, profit margins, debt levels, and market position. In Fiserv's case, the stock has experienced a sharp pullback from its 52-week highs, missed recent earnings expectations, and faces some uncertainties regarding revenue growth. These factors explain why so many analysts have adopted a neutral or hold stance. Even though the company remains profitable and has strong operational efficiency, the risk of further declines in the near term is keeping analysts cautious. For investors, this means that while Fiserv might not be a strong buy right now, it could still be worth holding for long-term growth if you believe in the company's underlying business model. So, what does all of this mean if you're considering investing in FISV? Here are a few key takeaways. Price targets are mixed. Analysts have price targets ranging from $60 to $127.50, reflecting a broad spectrum of opinions. Most analysts, however, see the stock as fairly valued or slightly undervalued around current levels. Earnings missed expectations. The latest EPS and revenue fell short of consensus, which may continue to weigh on short-term stock performance. Profitability remains strong. Despite the earnings miss, net margins and return on equity are solid, showing that Fiserv is managing its operations efficiently. Valuation metrics are reasonable. With a PE ratio around 10, the stock is relatively cheap compared to the historical range and peers, but slower growth may justify the cautious stance. Volatility should be expected. Given the 52-week range of $59.56 to $138.59, anyone investing in FISV must be prepared for significant price swings. Long-term outlook. Fiserv's guidance for FY 2025 and strong operational fundamentals suggest that while the short term may be bumpy, long-term investors could still see upside if the company continues to execute effectively. If you're holding Fiserv stock, consider these strategies. Long-term holders. If you believe in the fintech sector and Fiserv's market position, staying invested could pay off when the broader market or company-specific catalysts push the stock higher. Cautious traders. For those looking for short-term gains, the neutral ratings and mixed earnings reports suggest caution. Tight stop-loss orders or hedging strategies could be appropriate. New investors. For those considering entering the stock, it may be prudent to wait for clearer signals from the market or quarterly performance updates before committing significant capital. To wrap things up, Fiserv is a company at a crossroads. Analysts remain mostly neutral, reflecting the balance between operational strength and recent earnings challenges. The stock's price has pulled back sharply from its highs, creating both risks and potential opportunities depending on your investment horizon. Key points to remember. Earnings were slightly below expectations, analyst price targets vary widely, and valuation metrics suggest reasonable pricing relative to the market. For long-term investors, Fiserv's fundamentals are still solid, but short-term volatility is likely to continue. As always, it's important to do your own research, monitor upcoming earnings reports, and consider your financial goals and risk tolerance before making any investment decisions. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.